Welcome to another episode of Crypto Over Coffee Q&A. It's a follow-up show to Crypto Over Coffee, our weekly news show, which answers questions from you, the awesome folks who watch, listen to the show, follow me on Twitter, all that good stuff. We got a bunch of questions, and just a reminder, if you want to get your question answered, leave it in the YouTube comments, tweet me at Hashoshi4, and make sure you're following me and subscribed on both platforms so you don't miss any of my crypto content. So with that, here's the first question from Micah. Does Sol have what it takes to survive the repercussions of the FTX collapse? As we all know, Solana was very exposed to FTX. Solana also was very exposed to a lot of venture capital. There's been a lot of issues in Solana as a result of this. You had a lot of incentives that were not aligned with the community because a lot of these venture capitalists wanted their money as quickly as possible. A lot of the big players in the space were gaming TVL or total value locked. We saw all that happening. You saw a lot of pushing and prodding and hyping from FTX and other players like FTX, and it was really widely reported that Sam Bankman-Fried was very high on Solana, okay? And all that's fine, right? That's not really the Solana core team's fault, per se. The issue here is that now you're in a weird position because there's an still kind of unknown exposure to FTX and all of this stuff that's going on. You don't know how far this issue is going to reach. And people are calling into question, did Solana have all of its reserves in FTX? And of course, the team's going to say they didn't, right? And they're going to say, we have plenty of runway. I think the report from Solana's team was that they have 30 months of runway at current capacity, so they could survive for 30 months and continue. And that's great, right? Hopefully that's true. And of course, we need verification of that, or else it's kind of one of those everything's fine, but is it really fine that you see a lot in crypto. I still think that regardless, Solana has an opportunity here, an opportunity to reverse some of the directional decision making that was made during the bull run and sort of in the beginning of the project. They can shift focus away from the hype and the marketing and the talking, and they can focus way more on the technology side, getting their network stable, which they've been doing a lot of work on. I've been following this very closely. There was an interesting report from, I believe it was Coinbase recently about Solana's efforts. It may have been Coinbase's technology arm. And they could continue doing that. If they get their network stable and they start really focusing on the core of Solana itself, which is the decentralized network, progressively decentralizing it more, making it more accessible for the average person to become a participant in the network, very important. Focus on stability. You can't go down and have network failure throughout the year. You can't. It just can't happen. And I think they should divert attention away from stupid stuff, no offense, stupid stuff like shoes and phones. Phones come after your software is right. Hardware always should come after your software is right in the crypto space. I'm not even convinced hardware is important in crypto now because what I'm holding right now, an iPhone, what other people hold, Samsung devices, you think you're going to pry those away from them en masse? Yeah, the highest of the high Solana people are going to love it, but that's all you're going to get. Why are you wasting time on hardware, wasting money on hardware? It's so expensive, not just on the developers, but on the actual hardware development itself. I digress. Solana can survive, but only if they make a huge pivot and focus on the right things and go into lean, mean startup mode again and not we are the coolest bull market thing in the world, because it's not a bull market anymore. There's not the type of fervent desire to buy up Solana, Sol, and all the coins in that little ecosystem. There has been a lot of issues, but when you're in this position, you have some runway. If you have 30 months of runway, you've got a pretty strong team, which they do, undeniably. Buckle down, focus on the technology, and move forward. Leave behind the hype and the VC and the marketing and the exchange partnerships and all that other stuff. Focus on the technology. And it will do really it'll do a significant amount of damage reduction, in my opinion. So yes, the answer is Solana has what it takes to survive, but only if they are led in that direction. That's my thought. You're free to disagree, by the way. That's just my opinion. All right, second question is from Pocahontas. Is DOT a sleeping giant, even with Gavin stepping into more of a tech role? Okay, so this is about Polkadot. And its fearless leader, Gavin Wood, formerly of the Ethereum ecosystem, the creator of Solidity, the programming languages you probably all know. It was recently reported that Gavin Wood would be stepping down from his CEO leadership position in the Polkadot ecosystem. So it was really at the main foundation behind Polkadot. And people were really scared about this. They're like, oh, Gavin Wood's gonna, he's leaving again, like he left the Ethereum ecosystem. And I don't think that's at all true. And I don't think that's at all accurate to how this is actually playing out. I think this is actually a really significantly, I'm not going to say bullish because we're in a bear market and that is a ridiculous thing to say. This is a really positive outcome and a positive development for Polkadot long term. Why? Gavin Wood is not a CEO. I'm not disparaging Gavin Wood in the slightest. There are people who are CEO types and there are people who are not CEO types. There are people who love the CEO role, which is a lot of talking, which is a lot of strategic leadership. It's trusting your whole team to execute in their functional area. It's being able to steer your company through storms and trash and disaster. It's being able to just be there and lead across all the functional areas of the business, tech, finance, etc. Okay, great. We get that. Gavin Wood's main passion, if you listen to him speak, if you look at his resume of things he's done, he likes getting deep into the weeds in the tech. He likes building cool tech. He likes inventing and designing and architecting. And not everything he does is fantastic. I'm not like a Gavin Wood fanboy. There are many out there. But what I will say is I respect what he has created in the past. And the reality is that him shifting into more of a tech role is him signaling, I don't need to be forcing myself into a CEO role because I think Polkadot's in a stable enough place from a leadership perspective to do this without me. So I can focus on what I really like to do, which is the technology side. So with Gavin Wood deploying his mind to the technology again, that's actually really good for Polkadot. Let someone else who is more focused on and filled up by and passionate about the CEO role take the CEO role. So I think this is a good thing, not a bad thing. Next question here is from Ertman, Lavender 5. I really hope I pronounced the name right, so I'm sorry if I didn't. If you could choose between these two, would you have crypto be transparent forever, ensuring mass auditability but sacrificing user privacy, or have crypto be private by default forever, where the total result is verifiable but individual actions are always anonymized? Privacy versus transparency. Now, I'm going to be very annoying and say that the actual end result, the ideal scenario, is going to be private by default with the ability to, at user control, right, user selected sharing. That is the ultimate answer. Me being able to selectively share raw data with someone else by signing a transaction to do so. But I get it. Not everyone likes the idea, and that's not the question. I would always, when given the decision, when given the choice, opt for privacy. The reason being is that privacy is a right. Transparency is very positive from an accountability perspective. We get that. That's been thrust into public eye right now with FTX. However, the issue is privacy being thrown out the window has much higher propensity of being abused than transparency does. And I think that if we were to go the route of saying that privacy is gone, we want transparency, then I don't think that would be a good outcome. I think because transparency would be weaponized against people, as it has been already in many cases from an individual perspective. And so there's that complexity. There should be transparency from companies, but individually, there should be the ability to maintain anonymity to an extent. And so the answer is on a gradient of transparent to private. There's a middle ground in there that is the ultimate answer, but I would always opt for the privacy side over the transparency side in terms of what I want to see and what I would prefer for crypto, just because without privacy, you have a huge propensity for abuse. And I definitely don't want that. And I know a lot of people would argue with privacy, you also have the propensity for abuse because people don't have accountability. They can do whatever they want under the guise of privacy. The answer is sure, but does transparency really prevent that? In my opinion, not really. It doesn't. All right. Next question is from Dracula. Are there any additional risks to the Coinbase wallet that are specifically tied to its association with Coinbase, the exchange, or does it just have the normal risks of other hot wallets? So Coinbase Wallet, it's a mobile application. It's available on iPhone and Android phones. And the answer is it doesn't have any additional risks per se being connected to Coinbase family of products. What I would say it does have, though, is I would say it has a deeper connectivity with exchanges because just of the fact that it's built by an exchange, and there will be a bit of confusion from users at times as to what Coinbase Wallet is. They think it's part of the exchange, and there's a risk there because they move funds to Coinbase Wallet, and they're like, oh, it's still non-custodial, right? So they don't save the seed phrase. They don't really know what's going on. So there's a little more risk there because people don't understand the difference between Coinbase Wallet and Coinbase, the app. One is custodial, one is non-custodial. And when people don't understand the difference, there's been a mistake. So I've actually dealt with a lot of people online. I get a lot of messages from people on different messaging platforms, even Twitter DMs saying, hey, I wipe my phone and I open my Coinbase app and my funds are gone. And I said, did you have Coinbase Wallet on your old phone, or did you have Coinbase the exchange on your phone? Oh, I had Coinbase Wallet. Well, that's why. You blew it away. And if you don't have your seed phrase, you're cooked, right? So that's exactly why I'm saying there's a little bit of that confusion around the connectivity between the exchange and the wallet. But beyond that, for people who understand the difference, it is a hot wallet and has the risks of a hot wallet. Your key is stored in ciphertext format on your phone, on your device, right? That's a risk because if your phone were to become deeply infected, you could expose your key. So if you get a keylogger, you type in your passcode, you open up the app or whatever, you could be exposing your key. The second piece is that the seed phrase is the key to the castle. You need to make sure you keep that safe. In my opinion, Coinbase Wallet's great for small amounts, small volumes, nothing crazy. I would not keep your whole stack in Coinbase Wallet. It's just not worth the risk, or any hot wallet for that matter. I don't care if it's Coinbase Wallet or Rainbow Wallet or any of the wallets that I like. Don't do it. Don't leave your main stack on your phone. So what I would say is perfectly reasonable to use Coinbase Wallet. Just keep your seed phrase safe and secure, and make sure if you have crypto on your phone in hot wallets, you need to be extra careful about what you're doing on your browser, what you're downloading to your phone. You got to keep your phone like a temple, right? It has to be nice and clean. And then the last question of the day is from Orsmani. Does the FTX fiasco undermine the entire premise of alternative coins beyond Bitcoin? It seems the promised utility has not been realized for other purposes projects, while entirely decentralized coins like Bitcoin, only real value is a holder of value. Would love to hear your thoughts. So I agree to an extent that the FTX collapse has really exposed the fact that there is just a lot of trash in the space. If you remember several months ago, when I sort of made my final admission and made peace with myself that we were in a bear market, and I shared that with you, I said that this could very well be the bear market. And in previous bear markets, we have seen 90% of the bull market trash being taken out to the curb and gotten rid of once and for all. I would consider it a wild success, acknowledging that it would hurt a lot of people financially, and I'm not happy about that, so I'm not celebrating that. But it would be a net positive for the space for 95+% of the trash we saw in the last bull market to be completely removed and eradicated from the space. If you have the last 5% left, I think that will, excuse me, I'm frogging my throat, that would probably be a good place to springboard to the next phase. And it may not be the fervent bull market that we saw in the past, different times. With regards to your question about whether FTX exposes that all altcoins are bad and that Bitcoin is the only answer, I would say I don't believe that's the case. And there's a reason why. Bitcoin in isolation is still great. It still serves a function. It is a very stable, it is a very secure, and it is an adequately decentralized network. There are still areas of centralization. We must acknowledge those. Decentralization is a gradient, not a binary state of being. And what it does really well is it describes a cost of issuance, which drives the cost of production of Bitcoin through electricity and proof of work, etc., which also secures the network. So you get two things out of it. And that cost of issuance also drives the price on open market, again, supported by scarcity. So you have that decaying inflation rate in Bitcoin. This is a great example of a monetary instrument or reserve asset for the rest of the world that's not affiliated with any single state or country that is very stable. The problem is, in isolation, it's not as good as it is with other blockchains. Bitcoin and Ethereum coexist together very well. Their communities do not, which is a human problem, not a tech problem. Ethereum makes Bitcoin better. Bitcoin makes Ethereum better. The reason being is that when you have a stable store of value platform like Bitcoin and you have a lot of capital there, people that have that capital want to use that capital to deploy that capital into financial services. They can't do that in the traditional space. So what do? They go and they pursue DeFi. They pursue DeFi on chains like Ethereum. Ethereum is still the king of DeFi, no matter what anyone says, and it will likely remain so for the time being. So Bitcoin holders can extract value from Ethereum. Ethereum then extracts value from those Bitcoin holders, and it's a coexistence. There are issues with DeFi. There are issues with a lot of things in this space, but those are maturity problems, not fundamental first principles problems that are like, oh, this just doesn't work, period. The point that I'm trying to make is that there are going to always be, there's always going to be a need for alternative coins than just Bitcoin, because Bitcoin just doesn't, frankly, do what other networks do. Bitcoin does not have the capacity to facilitate complex programmable logic, Turing complete or not. That's a missing piece, and I don't think Bitcoin should even go that route. I think it would be stupid to try. Let Ethereum and other blockchains take that on. And therefore, there will be other altcoins then that exist, because these all have their own security models driven by their own economic incentives and disincentives. Ethereum, Cardano, whatever, they all have their own. So I think there needs to be far fewer, and there will be far fewer altcoins in the future. But to say Bitcoin's the only thing that has value, I think misses the fact that Bitcoin does need other things around it to be more and more and more valuable, to be adopted more and more and more, because frankly, I don't think that there are enough people out there that are drawn to Bitcoin simply because they believe that buying it and sitting on it are going to be beneficial to them financially. I think there's going to be a need to deploy capital, and people are going to want to continue to deploy that capital that they have in Bitcoin. That's my philosophy or my opinion. Again, everyone's free to disagree. Conversation can happen in the comments. But with that, please make sure that you do leave a comment with your question. You can also tweet me at Hashoshi4. I always check there as well. I want to thank you so much for checking out this episode of Crypto Q&A. And until next time, cheers.